Let's go across and chat with the management of LTIMindtree, which reported its results yesterday. Now, Venu Lambu, the Chief Executive Officer and Managing Director at LTIMindtree, is now joining us. Thank you so much, Venu, for joining us today. Very good morning. Let's start by talking about your financials. Now, you've seen a revenue growth of about 2.4% on a sequential basis in constant currency terms. And the deal TCV, that has also been very... What all transpired in the second quarter, which were the segments that aided growth, and what's the outlook for the second half of the fiscal?
Definitely not slightly lower than Q1. It's pretty much almost the same, right? So 1.6 is what we'd announced in Q1 on the order booking, and it's 1.59 for Q2. So it's not much of a difference. The pipeline remains good for us, and we are seeing traction in the large deals. Second, and as I mentioned in the earnings call yesterday, that in the second half of the year, we expect to continue this momentum, both on the margin expansion as well as the revenue momentum.
Mr. Lambu, let's also focus on deals now. Consumer business revenue has shot up by 9.1% quarter-on-quarter basis. Was this driven by large deal ramp up and any other large deals in the pipeline in this segment?
The large deal did contribute to the last deal ramp up did contribute to the sequential growth that you see in the consumer side. But there's also, if you look at the broader consumer side segment, there is a retail and CPG, then you have the travel, transport, and hospitality. We are seeing a good traction in the TTH sector. We got very good deals, which are more of a AI-led operations and AI-led development programs in the TTH sector, and that also has contributed to the sequential growth.
All right, so that's about the deal pipeline. But Mr. Lambu, in your call yesterday, you did mention that there's some softness in top 5 clients, which has been attributed to transitionary phase as far as AI productivity benefits are concerned. But how do you see the revenue from these top 10 clients evolving over the course of time? Is that softness likely to continue, or is it going to accelerate? Is AI-led productivity, is that also impacting your existing orders?
Overall as a company, we delivered a robust growth, right? So, and at the same time, across the client, different categories from 6 to 11 and so on, we had a good growth. That's why, we ended up having the great first half of the year. Now, there are certain category of accounts, especially the top 5 that you're talking about, are large engagements. So any transformation that we do along with them in terms of enhancing AI productivity, comes out as a material impact for that particular quarter. But as I mentioned yesterday, there are 2, specific approaches with regard to any client for that matter. One is, there is a great opportunity for us to infuse AI into our existing book of business and make sure that benefit is passed on to our customers. That's a business we are in. But at the same time, on the other side of the productivity journey, there's a lot of things that we can do with our customers, right? Either, we can drive the same productivity through the vendor consolidation strategy, or we can create what I call as an AI native services in reimagining their business process, bringing in more competitive edge to their business, leveraging AI. These are the conversations that we are having with our customers. So, the transitionary phase that I talk about, is actually a great opportunity for us. While it might see a bit of a revenue headwind, for that particular quarter, but in the long run, I think is the right thing to do. And, it has a very strategic impact in terms of relationship, between us and our customers.
Long-term impact, that's going to benefit you. But then, how are you looking at increasing your AI offerings and accelerate revenue from AI-related services? How much revenue did you generate from AI-led services?
We were probably the first ones who launched, a platform to create an agentic ecosystem, and we called it as Blueverse. We are seeing a good traction in the Blueverse agentic ecosystem. Blueverse has 2 dimensions to it. The Blueverse tech, which is essentially to infuse AI into our existing book of business, and AI native services where we reimagine the business process using the Blueverse Business Cloud. Now, that part of the business is, taken up pretty well. We are doing very interesting engagements with clients which have gone just beyond the POC. Now, coming to the part of the opportunity that we see over there, is in both sides. When I take the AI infusion differentiation using Blueverse, I get a chance to actually, look at the, bigger wallet share with our customers when they're actually thinking about rationalizing the vendors, as an example, or when they're thinking of modernizing their technology. In some cases, when they're getting ready for AI. So there's a big opportunity in the AI, tech services, but at the same time, AI native services, which is essentially to reimagine the business process. I see a great opportunity as well in terms of reimagining, whether it's the horizontal processes or the industry processes for that matter. When it comes to the definition of AI revenue, look, we're still working on that. Everybody has a different definition on what all to include when we classify it as an AI revenue. At the moment, we're not calling that out because I do believe that AI is fairly pervasive in its nature. You have data service line playing a role. You have digital engineering playing a role over there. You have the cloud native services playing the role. In some cases, interactive as a role to play when it creates an AI-based creative artifacts. So there are a lot of things that has its own manifestation in terms of AI. So just calling one specific thing as AI services, well, we can do it as long as we get the definition much sharper. So it's something that we will start sharing more color in the next quarter onwards.
All right, so that's about the AI segment, but let's also talk about your margins. They were well above street expectations at that 15.9% level. It's up 160 basis points on a sequential basis, and that's partly led by seasonal factors and Fit for Future program as well. So how much of this margin that you have seen in this quarter, is it going to be sustainable going forward?
I think when I spoke at the end of the first quarter, we did mention about our intention to expand the margin by 100 basis points. We are ahead of the plan, right? Now, when it comes to the second half, I do believe that we can sustain the margin. There are still areas where, we can leverage the opportunity and, expand the margin in Q3 and Q4. So, yeah, that's all I can say. I mean, we are fairly confident about our margin expansion in the second half of the year.
All right, let's also talk about dollar revenue. So near double-digit dollar revenue growth in H2 FY26. Now, what makes you so confident about it?
The results, the deals, and the pipeline, right? So we have delivered the results in the first half of the year. And if we continue the momentum at the back of the last deals that we have won, and there are more deals in the pipeline that we're working on, that's what it gives us the confidence that at some point of time in second half, most likely in Q4, we should come very close to the near double digit.
All right, thank you so much, Mr. Lambu, for joining us today and taking us through all that transpired in Q2 and the outlook going forward as well. On that note, we'll let you go. Thank you so much for your time.